Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 5:30 in New York. It is Monday, first day of July 2019, and this is the daily report for gold and silver. Following the announcement of a truce between the United States and China, when precious metals opened Monday morning in Australia, we saw a cascading effect in which they traded dramatically lower, actually opening up just above $1,400 at $1,401. This bases the August contract, breaking below there and never looking back, taking on substantial losses on the day. The key is that after such a pronounced rally occurred over the last couple of weeks, there was bound to be some profit taking. We took profits last week and have remained flat throughout this entire last couple of days, awaiting what kind of news would come out of the one-on-one meeting between China and the United States. The fact that it came on as a favorable talk and that really influenced a risk-on market sentiment to really go into the forefront. We saw the dollar much higher, we saw stocks trade higher, and gold under pressure. Speaking about that, let's take a look at our current pricing. Traders, as you can see, gold took the largest decline in terms of the precious metals complex and percentage drawdowns, losing almost 2%. 1.89%, a total of $26.70, taking August futures to $1,387 per ounce. Silver came in second in terms of percentage declines, giving up about 17 cents, 16.6, and closing at $15.17.5. At the same time, we saw nominal declines in platinum, giving up about $5 at $836.20, and nominal marginal gains in palladium, gaining about $2.90, currently tracked at $1,540.50 per ounce. The interesting thing is we had tremendous headwinds from a U.S. dollar, which gained almost 0.75% and is currently fixed at 96.37. Let's take a look at our technical studies and talk about a couple of price points that I'm very interested in gold in terms of a potential entry from the long side. Traders, absolutely no doubt, we saw gold plunge as it opened up in trading in Australia approximately 24 hours ago, actually opening at 1401.90 and then drifting lower. Throughout the trading session yesterday, as it moved across Australia, Hong Kong, London, and then into New York, we saw multiple plays to take market prices back above $1,400 per ounce, and in each and every occasion, those attempts were unsuccessful. Currently, we are sitting at $13.87. That's down $26.70. Basis most active August gold. I am looking at a daily candlestick chart, and on this candlestick chart, we have in essence one of the most important studies we're going to use to attempt to look for a potential level of support, and that of course is a Fibonacci retracement. We've highlighted two key areas. The first area is between the 0.38 and 0.42% retracement levels. The second one is the 0.618% retracement level. The first thing that I find quite interesting is when we look at the low, current pricing of course is at 87, and we are showing that the 0.38% retracement comes in at 385.50. The low today came in at 1384.70, so just below that tick. My question that we want answered is whether or not this level, this current level right here, is a level that could potentially hold. My sense is that it's a little bit too early to tell, and I am looking for either this particular area at 85 with the lowest potential of the market in terms of if there's further selling pressure that continues and remains fairly robust is around 1350. The 0.618% retracement level comes in at 1349.80. Traders, as you can see, I have just added a Fibonacci retracement level at the 50% mark. That, of course, comes in at $1,367.50. And my sense is that if we do not see support come in at around 1379 to 85, and we've already actually hit 84, so we've traded into that area. I think the lowest that we'll see is not going to be the 0.618, not on this retracement. I think it's more realistic to look at the 0.50, the 50% retracement. That comes in between 1370 and 1367.50. Therefore, my recommendation is to maintain a neutral stance and look for a favorable entry point using this recent sell-off as an opportunity, since we did pull profits at $1,410 last week and have remained sidelined in case of this type of an occurrence. Had it gone the other way and the market really traded briskly higher to the upside, I'd have no trouble buying into momentum, but my sense was that it was just as likely that we would see this market plunge, and I really didn't know which way it was going to go. The best course of action being neutral. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Of course, Thursday, is the 4th of July here in the United States. It's Canada Day, of course, over just north of the border. So the markets will be closed on Thursday, but they will reopen on Friday with a shortened trading session on Wednesday. Have a great day. Talk to you tomorrow. Bye-bye.